Let's get this started today. Very much welcome everyone to this Friday afternoon. It's an exciting time. So in this autumn where I think very gradually everyone was hoping to meet each other again in person. And so were we actually very much hoping to meet you all in person as well, to be able to welcome you to our office. But in the light of the changes in the COVID situation in the Dutch market, we felt obliged to actually make this an online meetup again, as it looks like tonight it's going to be announced that the Netherlands is going back into a lockdown. Not a very favorable situation, but we believe that if we actually pull together, we hope to actually get through all this and get into a better situation. And so from that perspective, it's a bit of a weird day. We had to do some improvising to make everything work like we wanted. But I think we've got, nevertheless, some great speakers for you, and I hope to not just bring you some entertainment, but some insights that are really worthwhile to think along for your weekend, and hopefully sparks your interest to further dive into the market of fintech and perhaps reach out to the companies that are presenting here today. To take you through the presentations today, what we're going to do is, after my brief welcome, we're going to talk about a bit what happened last month in fintech. As you may know, on a weekly basis, we provide you with all the news, insights, funding rounds, and opinions that are being spread around the fintech sector globally. And now we actually just give you a slight digest of that, of what we thought was the most important news over the past month. And it's better to really pay attention here, because at the end of the day, you'll see that we'll also have a pub quiz where you actually might find that some of the answers could be found in the market update. Then we're going to listen to Joshua Violet from InnoPay, who's going to tell us a little bit about what InnoPay is doing, especially focused on startups and scale-ups, and how they could actually become better equipped to further grow in this industry. Then we've got Marcus Jaarburg from Banking Circle, who's going to tell us about the work that the Banking Circle does. He's a bit challenged by his connection, so we're going to together pull him through and make sure that this message comes across. But we're very much looking forward to his talk, but it will probably be a bit of a challenge, but nevertheless, we're going to make it work. Then we've got a little bit of a fun break with the pub quiz. Then we're going to listen to Tobias from Hawk.ai, and going to tell us more about the work that they're doing with artificial intelligence. And then we're going to get an update from Silverflow, Anne-Willem de Vries, who can only join us slightly later. Fingers crossed he can be there right on time. They can tell us a bit about their recent funding round and their expansion plans going forward. So I think we've got quite an exciting group of speakers today. I'm very much looking forward to it, and hopefully so are you. What we're looking for now is actually especially also your interaction. So I actually can't see them right now, but we're hopefully we can still get the Q&A section activated, so we can make sure that you can ask questions, and we can make sure that the speakers after the pitch can answer them for you. So please be curious and ask around, and then we're more than happy to of course try to get the answers for you. Let me now go to the market updates. Yes, here we go. Come on. Yes, I hope you've got my screen full now. Then let's take it through. So what we're going to do now, especially, is just briefly go through the categories as we also find them. You could also find them in our newsletter, as it's actually going out also this Friday again. So first, we're going to look into some highlights of the news, then some highlights of investments, then research work, and then some of the opinions that were flowing around. Over the past month, so we're looking at October, it was quite interesting to see that China is really coming down on their fintech companies and large tech firms. You see there's a real big battle going on. I think at the beginning of the year, perhaps you recall that Jack Ma disappeared off the earth for a while. I think you see that even though he resurfaced, He actually was in the Netherlands in October to visit some greenhouses and look at some green technology. It was quite interesting, actually, because it wasn't announced. And all of a sudden, people figured out that it was Jack Ma visiting their company. Quite an interesting development. So he's allowed out in the open again, but you do see that in general, the tendency is keeping on that China is in a bit of a power battle with their big tech firms, stopping some of the IPOs that were on schedule. And you see that they're, from a regulatory perspective, they're really trying to scrutinize them. And I think it aligns a bit with what we see also in the crypto world, right? So also China has decided to ban everything in crypto. They're trying to really get in control of their tech ecosystem again. I'm really curious if that will pull through, or whether they will at some point also realize that they might actually need those companies on a global scale to actually further expand their own tech ecosystem, and they need to be more open, probably, to be able to do that. So I'm very interested how that will evolve. It's interesting to see that also some markets that are perhaps getting less attention in the global media are actually doing well, like Indonesia. They rose quite some funding in October, and really stood out from the rest of the world with regard to the number of deals that were being done. Not the biggest rounds, but you do see that the activity there is growing very much. And then thinking about that, it's actually a very large country with, I think, over 300 million people. No, that's actually too much. I don't recall the actual inhabitants, but it's a really large country with many inhabitants. So it's a really popular market actually for fintech solutions to go around, and it's highly tech driven. A lot of innovations to be done there. So definitely good to keep an eye out for that. We saw the first home equity investment-backed securitization. That's quite a mouthful, but it comes down to actually trying to not securitize loans, but actually securitize equity on homes, which is a new deal which was done in the US. Interesting development from a capital markets perspective. Then in Europe, we saw that France FinTech and Binance announced a 100 million crypto and blockchain fund in France. So they're actually, they really want to attract crypto initiatives and startups in the fintech space to their premises. And that is quite interesting to see that France is really taking the lead here. And I would expect that multiple other countries might follow this as well if they see that this is going to work and attract more companies and more tech talent, especially to their ecosystem. So it's interesting to see always generally when famous people get involved, you should always worry whether the investments are going in the right direction. In this case, I think you could be quite sure that when Prince Harry and Meghan, who recently emigrated from the UK to the US, they decided to work with the firm Ethic, which is a social fintech company. Quite interesting to see that they're supporting this. And I think that's also, it kind of highlights as well, I think, the enormous move that social fintech is making across the world. Also in Europe and in the Netherlands, we see a lot of companies now focusing on the social side of fintech by looking at fighting poverty, doing financial education, or, for example, social collections. And I think that's quite interesting to see that development. And it remains, I think, quite an important field for all tech companies to keep an eye out for. Well, generally, some of the VC companies are actually discussing whether deals are becoming overheated. It's the markets are red and hot. You see a lot of IPOs, SPACs, and you see also valuations still going through the roof. But the question is, are the companies becoming too expensive, or are the actual currencies like the dollar and the euro actually becoming less valuable? That's also one way to look at it. But we do see indeed that people are getting worried about a bubble sort of coming out of the pandemic, where people might be too optimistic about where the markets are heading. And we see, of course, rising prices to a large extent across housing, stock markets, cryptos, but also actually if you look into private equity and venture capital deals, we see that the prices are really beyond what we've seen before. Then going to some of the bigger tech giants, Stripe acquires Reco, which is interesting because this is the first acquisition in India. India, of course, has since they made when they introduced their digital identity scheme and the payment rails on top of that, they've become a really popular place for fintech solutions to roll out and scale up very fast. And it's interesting to see that Stripe is now also moving in the to this market with this record acquisition. Curious how that's going to evolve. Stripe again, if we talk about when they in the collaboration with Klarna, you see that almost any payment firm now wants to be able to offer buy now, pay later solutions, and Stripe and Klarna partnered up now to get that done. And it's interesting as well, I think also in the light of the collaboration between small fintech companies and large financial institutions, that in the US, the Justice Department is looking into the relationship that Visa is having with their fintech companies. Whether that's actually what they definitely see a risk in working with too many fintech companies. So this could also be, I think you could see it also in the light of, for example, discussions around DORA in Europe, where people are talking about whether the financial value chain is fully under control and whether companies are able to actually keep the risks low in the ecosystem that they work with. So very curious to see what comes out of this this research that the Justice Department is doing. Those are some of the highlights. Going into what investments we saw, just trying to flow over the highlights to not take you too long from this. These are the largest deals that we saw globally. Invicti Security was the largest deal, with FTX following a suite with 366 million. And you see there also that the valuations are really going through the roof with 21 to almost 22 billion for FTX. Brex is also a really nice deal with 261 million euros. Cred and Reuters actually doing again Indian deals. So that's quite interesting to see as well that they also are discovering the Indian market and willing to do more deals there. So that's quite interesting development. Moving to Europe, we see that the biggest deal is by N26, raising 785 million. Then Zopa in the UK is also doing very well. GetSafe following TransferGo and Plum with much smaller deals, but definitely also worth noticing and also keeping an eye out on. And in the Dutch market, not much funding news, but we did see that Open actually closed a funding round of 30 million funded by Deutsche Bank. Open also one of our members. They provide a asset management investing platform for banks, for example. So quite interesting actually to see them getting another round of funding to further expand. Then we also cover a lot of research reports in our newsletter. Generally, that's too much information to provide to you in just a small update, but we always highlight just some graphs. What's interesting here to see that the digital banking market share, how that's evolving between the US and Canada. You see in any case that digital banking is expected to further grow very fast in those markets. And on the right-hand side, I mean, it's pretty hard to actually go talk about financial services and not talk about crypto somehow. And it's definitely interesting from the investment perspective, as you see that crypto is especially being seen as an investment class these days. And a lot of people are speculating on price increases or even doing day trading around cryptocurrencies. And so far, cryptos are outperforming the market. But of course, this is a graph that looks after July. Depends a bit on when you actually take your first pick. If you would have started on the end of 2017, for example, you might have actually had quite a different view on whether crypto was a good investment or not. Nevertheless, we do see that now prices are actually still increasing quite a bit. Well, you could argue that also inflation is, for example, potentially an important driver behind it. So if you want to look at the research reports behind this, please check out the newsletters. Also, if you do actually sign up to our current newsletters, you could actually also access the archive of previous editions where you can also find these reports. Then just some insights on, it's always nice to just see what some people are thinking about what's going on in the industry. And you see that, for example, COVID-19, of course, really drove people into digital solutions. So it's very funny actually to see that some companies really that were already doing good, they accelerated much faster due to COVID. And some companies that were not doing that great actually did worse during the corona because they weren't able to pull through. But it's interesting to see now if we look at the whole trading perspective, like Jean-Yves is saying, it's really interesting to see that the trading becomes much wider distributed across different people, but also much different players. So it's a really diverse ecosystem that's coming to existence now. I'm not going to go in deep too much on all discussions. I think you can read them for yourself. So I would like to close it off at this, just to make sure that I don't make it too long. I think I've already spent over my time. So it's time to actually go to the really interesting speakers of today. I would like to ask then Josje, or no, maybe first my colleague. Yes, thanks, Wyndham. Or Elisa, I actually can't see who's on the ball here. So we're going to listen to Josje Violet now from InnoPay. Josje, are you ready for this?
Yes, definitely.
Yeah?
Yes,
all right. Sure. Looking forward. Take it away.
All right, will do. Well, thanks Don and Holland FinTech for having me today. My name is Josje Violet. I work at InnoPay. I'm their senior manager. And InnoPay is a niche consultancy firm specialized in the field of data, digital identity, and payments. But today I would like to take you along on a story, because of course I was hoping to see you all in person, but unfortunately that wasn't possible with all good reasons. But then normally I try to charm the audience with my presence, but now I thought I had to step it up a bit. So I want to tell a story, and it's about how you can prove your future-proof your compliance capabilities. So Original Association BV want to sell their square stones in the USA, and Business and Compliance, they are in charge of planning this trip. And of course, the shareholders are watching closely because they want to have a return on their 22 million investment. Business has some firm ideas. They want to use their existing ship for the journey because it's very speedy and it's very agile. But compliance, of course, also has its own ideas, and they want to build a ship that is very resilient and that is very durable. But in the end, after discussing a bit, then business makes the call, and they will use the business ship. Over the first few days, the ship passes several harbors. And at the first harbor, watch out, pirates ahead, you need cannons. The second harbor, watch out, little wind ahead, you need extra sails. And this goes on. And you see that the ship is getting heavier and heavier as they are trying to respond and incorporate all these well-meant advices. So after a few days, you see they are losing packages already. And then even worse, the ship gets caught in a storm and they need to return to the harbor. And of course, there you have compliance saying to the business, I told you so. And now they have to leave a lot of value behind because they cannot move ahead because they are too heavy. What a waste. And then after a few weeks of sailing, the ship finally arrives in the USA, where they are mentioned that they are 2 months late and that the square blocks that they brought now must be carved into bowl shapes because regulation has changed. Looks like they have to change everything, and I hate to be your shareholder right now. So now I hear you thinking, would this be a completely different story if we went with the ship that was suggested by compliance? Well, probably not, as it is too heavy and it has to be, it's very long and it's very expensive to build. But what if business and compliance collaborated and combined their views in a ship design? Together, based on previous experience, they could come up with a ship, the MS-MVP, combining their views, an agile design that they can use for their future journeys. After only 2 months of building, the lightweight ship set sail for the USA. And now, instead of having all these advices and requirements that they need to embed, they are very well prepared. Good luck. They are able to navigate different storms and they arrive in the harbor in time. What you maybe recognize in this story, on a bit more serious note, that it is very difficult these days to navigate these open waters and to sail the open waters and realize your ambitions. Because requirements are not only coming from the regulator anymore as being a fintech, but they come from all kinds of angles. At every harbor, at every stop, there are new people sitting on the dock who want something from you. It's not just a supervisor, but it's also your partners, your customers, your employees who expect from you to do good business conduct. And if you are not prepared for this, then these requirements will hinder your growth and your scalability as you become, well, like the ship, you become too heavy, you become reactive, and you need to carry a lot of extra weight. And I think this is something that you might recognize, because the cost of compliance are getting really high, and that is of course a shame, because you have different ambitions. You want to develop new products, you want to develop and create value to your customers. Actually, what you see here are the symptoms of having a no longer fit for purpose operating model. And the symptoms thereof are that you are having point solutions that occurred after sort of reactive stance towards your surroundings. But also you are on your way to develop complex legacy. A lot of manual efforts in your handling compliance, and of course also unhappy employees because they want to do different things than working on their compliance requirements. So in this context, in this increasingly challenging business environment that you are working in, it's no longer sufficient to make your compliance a single stop function. As you saw also here in the strip, you have business and you have compliance. And this is still typically also what we see in a lot of companies that we work for. But that's sort of the old-fashioned view on compliance, because it is no longer just a stop function, because that's not scalable in itself. So what you really need to do is embed your compliance requirements proactively in your operating model. And that means it's not only people, but it's also different processes, tools and technologies that you use, data for informed decision making, and also very, very important, culture. Maybe that's even one of the most important ones. So the ability to meet your ecosystem demands is really a responsibility of everyone in the organization, but you do not want to hinder this, your growth and your scalability. So you really need to embed it in your way of operating, in your modus operandi, really in your day-to-day activities. And does that require a change? Yes, it does. But is it worth a try? Well, definitely, because as I mentioned in the beginning, the cost of compliance are really getting higher and higher. Rules are changing relatively quickly. All new requirements also are coming ahead, especially now that Europe is harmonizing their whole legal framework on all kinds of topics, being data, being payments, being digital identity. So that's also what we do at InnoPay, and we are very eager to support you in building these long-term compliance capabilities that really enable your future growth and scalability. We do a lot of work in the field of compliance, especially related to making sure that your operating model is designed in such a way that it can help you realize your future ambitions. But we also do a lot of other work, strategy execution, product development in the fields that are mentioned here: payments, data sharing, identity, banking, fintech. And if you work with InnoPay, what you get is smart and enthusiastic people, a lot of experience across the sector, and also thought leadership. We're really at the forefront. We really want to make sure that we also embed not only your organizational context, but also the outside world and what's happening. And then together with you, really try to make you more resilient to also being able to deal with these future requirements that keep on increasing, but definitely do not have to hinder your growth and scalability. And that's what we're aiming for, of course, because it is a burden, but we want to make it, a bit less heavy than it is today.
Thank you, Josje. I think really interesting. Nice to always start with a comic to get everyone a bit in the mood.
Yes. On this Friday afternoon.
Yeah, no, exactly. If we can't use beers, let's in any case try to have a bit of fun in a different way. So I think it's really interesting, and so let's say I think it's really useful to actually look at this balanced view between business and compliance, and to see how you can actually make that work in practice. Do you know any examples, or do you have maybe an anecdote of a case where you have like, okay, but this is something that people should just, it's just so funny why it goes like this. Why can't people, get over themselves to actually get it done differently?
Yeah, well, I think the anecdote that you probably see in your own company as well is this sort of business and compliance being the opposites of each other, and where business always says compliance is sort of the says no department, and vice versa, where compliance says those cowboys from business. And what we typically do well, and what I really like to do, is also bringing these perspectives together. But you don't need consultants for that. That's something that you can do already in your organization by sitting down at the table together and see how you can do better. And maybe in my experience also, when we worked for different companies doing this, in the end, in a very large change program at MoneyU, for example, which is was also a fintech trying to get their payments proposition up and running. In the end, we were the first program to finish. So even before the product was finished, before it went go live, everything on risk and compliance was arranged, because there was a very good tandem together with business. We had all the approvals from ABN AMRO, from the regulator, etc. So it really can be done, but you need to do it together and approach it differently than just make it a staff function.
Yeah, yeah.
So a hopeful anecdote.
Yeah. That's always good to have, right? So if there are any questions from the audience, please feel free to jump in. I talk with Josje more often, so I think I can keep on asking questions, but it's more interesting, I think, if you're not familiar with her yet, ask a question.
Yeah, for sure.
So.
And if they're not for now, then also feel free to give it some thought and reach out later, of course.
No, exactly. So I think that's also a question by Seymour, if we can indeed make a contact information available. And I think we can do that, especially for the speakers, so we can make sure that people can reach out to you.
Yeah, sure.
Yeah. And I think that's one thing. Just want to sort of challenge you a little bit on this, if I still have the time. So one of the challenges, I think, is that companies very often, compliance is a form of risk management, right? So it's basically very often seen as trying to make sure you don't get fined. Just to make it really blunt, right? So
yeah, but I think it's too blunt. Yeah.
Sorry?
Because I think that is sort of changing, where
no, it is. And I do agree that that's the case, but I think that's very often is still seen as something you have to do, right? So, and I do think I do indeed see that also people are beginning to see it as a business advantage or a business model, as it's being called by Esther, right? So, but at the same time, I think in the early days, basically, when you have hardly any customers, you're basically just fighting for every euro revenue to come in. It's really understandable that this is just not top of mind, right? Because if it doesn't pay the bills, well, I know you need to sustain it, but it's a really delicate balance, I think. Is there some handles you can give to people to think about, what are sort of the triggers you should think about to look at basically your compliance framework, because you can also overshoot and basically drown in your cost base, right?
Definitely, and that's what you also see quite often, that it's way too much. So we decide to invest in compliance, and then we're trying to build the fort that, or the tank that compliance in the comic was building. But I think you should change the perspective, especially if you start from scratch. That's even maybe better, because it's much more about trust in your ecosystem. So people and your customers are expecting you to handle their data with care. They expect you to, like you also mentioned with Prince Harry and Meghan, there's much more social, also a sustainability to it. So I think the expectations from customers are also changing, and that is something that fintechs are very good at, having their desires and their needs at the center of everything what they do. So if you take that as a perspective, how can we make sure that we deliver value to our customers, not only by the product that we're delivering, but also making sure that that product is safe and secure, and we make sure that their data is secure. I think that already helps in sort of the perception and the feeling of how you need to deal with compliance. And as it is risk management, it is always about having a good story. It's about being able to explain why you do the things the way that you're doing them, and it's not by building that fort. So you can be very lean in this, I would say. But change perspective, that would maybe be the first tip.
Okay, cool. Thanks, Josje.
Yes.
Thanks.
Oh, I'm getting rated now. That's exciting.
No, exactly. Now, indeed, everyone, please use the on-screen rating form to tell us what you thought of Josje's story. And then at the same time, we're going to see if our connection with Marcus is still alive, because he was in a place where there was hardly any connection. I do see his number coming up. So, Marcus, are you alive?
Yes, Don. Yes, I'm live.
Very good.
Maybe
it's a good start.
Can you hear me?
Yes, we can hear you, and we see your presentation now coming onto the screen.
Oh, really good. So maybe small apologies. I've been traveling today, and I thought I found the right spot to stop the car and do this presentation, but it's the worst spot to stop, I think, because I've just a connection to call, no internet connection. So, but to keep it safe, I thought I'll maintain my position and have the slides in front of me as well. So I think we are good to go.
Great. Take it away, Marcus. We're very much looking forward to hear from you about Banking Circle.
Cool. Everyone, thanks for taking the time. I'm really happy to take you along our journey. Who's Banking Circle? We are basically a new age payment bank. I think we are at slide 2 at the moment. Or if we can switch to page 2. Yeah. So here are a couple of facts. We are a new generation payment bank. We are processing about 6% of the e-commerce flow. We support 25 currencies with 12 local rails. We are on track to hit our target of 250 billion this year of volume. EQT being our shareholder, we are about to hit the 200 clients by end of this year. So all cool facts, and it shows that our product that is being embraced in the market is solving problems, because I think that's the most important thing. You can do all kinds of cool stuff, but if clients don't embrace your product, you have a problem, right? But I'll explain a bit later on that. A little bit of history. So the next slide, please. The journey so far. So how did our journey start? So it all started off as an incubator within Saxo Bank. In the payment space, there was a lot of stuff going on, and Saxo Bank and a couple of smart people figured out that while consumers have the ease of pay online, banks, and as you might not always be aware of, have a slow network on the end. So for the manufacturers, for the supply chain in the back, payments are not processed as fast as you as a consumer are paying for your product. You would have assumed it would be the case in these times, but unfortunately it's not the case. So we built a platform especially for that, to process payments for the financial industry much faster. The success was basically in 2017 when we hit the 50 billion volume, and we outgrew the balance sheet of Saxo Bank, and we got bought by EQT in 2018. EQT is a private equity, and they really believed in our mission to make payments simpler, easier, and faster. And they supported us in getting our banking license, because in Europe it's quite effective to operate under a payment institution license. But as soon as you get out of Europe, it's quite difficult to explain what a payment institution is. So a banking license gives you a license that gives you to operate on a global scale. What else? What is interesting is, I think, of course, the volumes that we are processing, the fully cloud-based platform that we are having. And on the next slide, another slide of our growth. I'm going a bit faster to go to the product that will give you a bit more understanding of what it is. On page 5, you can also see a couple of names of clients that use our platform. And I would like to switch to page 6 because that's where it all is about. So what are we? We are a new age bank. We support 25 currencies. And our ambition is to be direct in all these currencies. So the mission for the upcoming 18 months is to have 12 currencies on our own network direct ourselves. We already have 3 of them. DKK has recently been launched, but Euro and GBP was already on our platform. So why is this interesting? Why would we want to have this on our own platform? Because we could easily work with another bank, but that is where the problem starts. When you start partnering with banks, payments can get delayed because all banks have their own risk appetite, but you become also part of their system and their infrastructure. So being independent and having your own network keeps you agile, but also the skill to grow without I'm searching for the word, reliance of your partner. So you want independency in this space. And this platform is not solely for banks. We also service fintechs. So we kind of try to give the financial services industry a new platform that can process payments fast, cheap, and in all the major currencies that are dealt in traditional businesses. What is significant? Like if you look at having these currencies on your platform, that is obviously key. But looking at the efficiency of processing the payments, that is basically where we make the biggest difference. Having a background in banking, looking at our reclaims by beneficiary banks, as you can see on top, below the dots, having almost lower than 1% beneficiary claims is almost unheard of. And this is what also makes clear that being part of a chain makes you less sufficient. So having the own network proves that you can make payments faster. So what you hear typically is when you make a cross-border payment in a non-euro currency in Europe, gets a standard processing date of 2 days. And sometimes if you have really bad luck, it can take up to 3-4 days. We process everything almost instant. And almost instant, Euro and SEPA is obviously a currency that adopts instant, but this isn't always the case with other currencies. And again, being directly integrated with the central bank and a clearing for other currencies, we can make this happen. So what we kind of trying to build is a platform that supports 12 currencies that can be almost instantly cleared between the beneficiary and the remitter. So basically, if we move to the next slide, what we are solving is a couple of issues that are existing today. When you have a legacy platform with traditional banks, how can you migrate from that to our platform? It's quite easy because we work with APIs, we work with Swift. So from a connectivity point of view, we are not different than other providers. But when you're sophisticated, we can offer you the API gateways that offer you the speed of integration. Because of the way we can process payments really fast on a global scale, we can always track the payment wherever it is. So also from an operational perspective, you could get a cost benefit, but also get your people doing other stuff within the organization that are more relevant for the client than on the back end of the organization, because we can take care of that. And you reduce the number of failures of payments, what is really sophisticated for clients, especially when goods need to travel from A to B. Yeah, what else can I say? I think I almost get the feeling that I get into a repetition. So I rather go to if there are any questions. Obviously, I cannot see you. I don't know who is the audience. But if anyone has any questions, please shout. And otherwise, after the event.
No, we do have a question here, Marcus, and thank you for this. I think it was clear. Sometimes the sound was a bit harder to understand, but I think the message came across about your payment platform. So there are some questions coming through. For example, why is it so hard to get Norse krones on the platform? Can you maybe elaborate a bit on that?
Yeah. So we use today partner banks to get Norwegian krona on our platform. Mm-hmm. And our ambition was to have Norwegian krona on our own platform as well. But what we saw in the Nordics is that there's a big differences in how the regulators look into new entrants in the market. So we expected to have Norwegian krona on our platform faster, and the same accounts for Swedish krona. But unfortunately, it got all delayed. So, for example, we expect to have Swedish krona around May on our platform, but Norwegian krona, we don't dare to give a timeline. And this is all about how the local regulator is looking into new entrants in the market. I'm not saying that they are not willing to have new entrants in the market, but they are quite careful with who they let to enter the market. And it's a continuous process and talking that needs to be taken care of when you get the opportunity. But we have confidence that we will succeed next year. And if it's not, we will focus on other currencies. But it's true, Norwegian market is not straightforward.
No, okay. Another question that I see, Marcus, is who your competitors are and whether you would consider Adyen to be one.
Oh, no, we don't see Adyen as a competitor because we see Adyen in a complete different space operating with a global scale merchants supporting the payouts for consumers that buying products. We are on the back end, so we could basically support Adyen in processing their payments in different geographies and markets. So we would be more targeting in Adyen to use our platform to make their payments on the back end more smoother and efficient. Looking at competitors, there are not many in the market with a banking license, and I've not come across of any that have their own network. If you compare us, you could compare us with a Citibank, JP Morgan, or Bank of America, those big banks that have a global scale as a network. But if you want to use that network, you will need to pay a lot of fees, and it's really costly to do so. So we try to be the new age bank that competes with the traditional network of the big banks.
Yeah, I think it's an interesting proposition there, Marcus. So well done. And so another question is, let's say who could work directly with you? Would it be you're working mainly with banks as your customers, I believe, right?
Yeah, basically every company that is active in payments is a potential client. Nowadays, we only deal with regulated companies, but we are working with hybrid models, starting to work with hybrid models to support companies that also are active in payments. So If you have payments, if you have a problem, just reach out. We are always open to have a discussion.
All right. I think that's interesting. So if you're also open to that, we can share your contact details in a follow-up, in a thank you email to everyone who's joining today.
Yeah, that's fine.
Great. Well, thank you very much, Marcus. I think we made it through. So very happy with that. Despite you being half of the grid, we made your pitch happen. So thanks for my colleagues also for that, Elisa and Wyndham. So please rate the pitch and the story of Marcus. You can do that now on screen. You should be seeing the poll. So please click the number there. And then what we're going to do is just a small intermezzo before we move on to the two last stories we're going to listen to today. So I'll be sharing my screen again. Here we go. Oh. Just a second. Here we go. You should be seeing the game pin now. So the story is you go to kahoot.it, preferably in a different window than you're watching now, or it's actually not the case now. So if you use Zoom installed, but if you're on a browser, please use a different tab. Then go to kahoot.it and use the game pin so you can join. You can make up your name or do even some marketing, but please keep it decent. And we're very much looking forward to have you here to have a bit of fun, to answer some of the questions and see how you're doing with regard to your fintech knowledge. If you've been paying attention to the monthly overview earlier, I think you'll be definitely in a beneficial position. So I'll wait a little bit for everyone to get on board. Okay, I think we've got everyone who's willing to play along now on board. Just final call now. Please join if you can to get on board. And otherwise, we'll just keep on going. And good chance for the participants now to actually win the prize, because we always like to send something nice to the one that actually makes up the most, appears to be the best in the fintech knowledge with the quiz. So we're going to get started.
Is it both speed and right answer?
Yes, indeed. So I'm going to write up the question: which company is being investigated for its fintech partnerships? Is that TransferGo, PayPal, Visa, or banks? It's indeed, the faster you answer, the more points you get. So definitely good to be quick, but be sure to have the right answer. Otherwise, no points. Yes, most of you got that correct. That's indeed Visa, as discussed in the monthly news overview. So this was a relatively easy question to get you all started. There's more easy questions, but also some harder ones. Let's see how you're doing. Michiel is now doing very nicely, so well done. Let's see what happens next. We got 10 questions, and I'll definitely keep the pace in. Which Dutch company raised funding last month, according to the overview we recently provided? Was that Open, Booking.com, PayPal, or Adyen? This should be an easy one for all of you who paid attention. Yes, indeed, it was Open who raised funding, the asset management banking platform. So also an easy one. Does it change much? No, Michiel is still at the top, but below that we see some changes. We're going to continue for a bit and then probably it's going to get really excited. FinTech firms Point and Redwood Trust complete a first ever what? A first crypto asset fund, a crypto transaction, cross-border payments, or a home equity investment-backed securitization. There we go. Oh, this was already a bit harder, but this was also discussed in the monthly overview as a transaction that in the US market quite made a bit of difference in the way that we securitize not the debt, but actually the equity side of home ownership. Quite interesting. And Jackie was on top of that. Well done. And we see quite some shake-up. So Michiel has to do his best to stay on top there. Stripe has completed the first Indian acquisition of which company? InstaMojo, ZestMoney, Reco, or Paytm? Yes, definitely you've been paying attention. They acquired Reco. Very nice that most of you knew that. So well done. What happened there? Jackie's still on top of the game.
Oh, yeah.
Let's see how it goes. Stripe and Klarna decided to move into a partnership. For what? Buy now, pay later, crypto exchange, online payments, or mobile banking. This should also be an easy one, I think, for most of you. Yes, for sure. So it's then really about the speed. And Jackie is on fire, apparently. So already 5 answers in a row correct. Nicely done. But there's sufficiently there in the follow-up. So it's probably going to be tough to keep the position. Let's see how it goes. 100 million crypto and blockchain initiative was announced in France, together with France FinTech. Who was their partner? BRD, Paxful, BitMax, or Binance? A bit tougher question. This was Binance indeed doing part of that funding of the fund, as well as being the partner for on the ground. Quite an interesting one. That might have shaken things up. Not yet, but SmilePay is doing a good job in coming closer to the top. Let's see where we're heading from here. Which EU regulatory technical standards were released this week? Was that PSD2? Was that lending, cryptocurrencies, or crowdfunding? This is a bit more for the insiders. See who's on top there. A tie between cryptocurrencies and crowdfunding. It was crowdfunding this week. The EU announced the final RTS for crowdfunding regulations. Quite interesting actually to follow. We're going to analyze them a bit and then also get back to you to write a bit about what they say and whether there are any surprises or things we need the market to work with. Let's see what that does for the scoring. Aardvark coming up, doing very nicely, making it tough for Jackie to stay on top, but let's see how that goes in the next question. 3 to go. Which company did Prince Harry and Meghan join? Bank, Holland FinTech, Ethic, or Cash Free? Answers are coming in quick, so I expect things to be fairly well understood. Most answers to be correct. Yes, indeed. It was Ethic, the social fintech company, that got them on board. Did that change much? Slight shuffle in the number 2 to 4 position. 2 more to go. It's getting more exciting. How much investment did fintech firm N26 raise? Was that 103, 563, 7 million, or 785 million? It's interesting, actually. They also got quite some challenges now with the BaFin, the financial regulator, for their conduct. So it's funny that they actually raised a big round last year. It was last month. It was quite on time. And we can see as well that it was also quite hard to guess that amount, but it was indeed the largest, 785 million. Any changes here? Oh, we see SmilePay heading to the top. Curious to see what's going on in the last question. It's going to be really exciting now. What year was Holland FinTech founded? This is also for the insiders, although perhaps most of you already know. It was 2017, 2014, 2010, or 2016. What year was Holland FinTech founded?
14.
Ooh, a tough question after all. And this was actually 2014. We were actually going to celebrate our 7th anniversary next week, but given the upcoming COVID measures, we're about to have to move that to another date, unfortunately. Nevertheless, we're going to have a party anyway at some point, so things will be all right. But now we come to the exciting point. Who won the pub quiz? Number 3, it's Jackie. Well done. Very good. We've got Greenfield at number 2, and number 1, who made it there? SmilePay. Well done, and nicely turned this into some marketing material. Please send us a direct message or to events@hollandfintech.com so we can identify you as the winner. If you take a screenshot or so, then we have your proof, and we'd like to send you something nice for making the effort and being so good on point with your fintech knowledge. Thanks for that. Then we're actually going to go on to the next speaker very soon, because Tobias also has to move out, I heard, pretty soon after 5. So Tobias, bring it on as soon as you can. And we're very much looking forward to your talk about Hawk.ai.
Hey, Don, thanks very much. And thanks everyone for being here today. I'm looking forward to show you what we've got. Let me just share my screen. I hope you can see that.
Yep.
Hawk.ai is a Munich-based business. We've started at the beginning of 2018, and our topic is anti-money laundering and the prevention of financial crime. I'm going to take you through a few slides, and I'm going to looking forward to some of the questions that I'm sure you've got. The background for what we do is regulation. We've heard some mention of regulation in the previous pitches also. So once again, regulation, a big topic for us. And what we see increasingly is a pressure that is applied onto banks just as much as it is applied onto payment institutions increasingly to fight financial crime, right? I don't think that there's any secret in this specific slide here. What we understand this to be is an arms race. We see that there is more and more asked of financial institutions. That's number one. We also see that criminals actually are finding new ways very, very quickly in responding to measures that somebody might put in place. And thirdly, we see a lot of change happening in regulation, as I said on the previous slide. So it's an acceleration, it's an arms race, and it's something that really is asking for change in the marketplace. That change for us is rooted in 2 things. It's really rooted in the fact that data should be used much more and more intelligently. And it's also rooted in the fact that technology, the level it's at the moment, should finally be applied towards the problem, because it simply can now be applied. The issue in numbers is simply tremendously huge. We see $1.6 trillion laundered every year. We see $180 billion spent every year by banks and financial institutions worldwide to fight money laundering, fight financial crime, to really no avail. At the end of the whole chain here, you see less than 1% of ever found money laundering, less than 1% of seized funds typically. So the whole thing really isn't working at all for society and isn't working for the banks or the financial institutions generally more broadly. Why is that? All of the technology that's applied is really pre-cloud, is pre-AI, is old school software stacks that don't make a difference and really only spit out alerts and spit out suspicious activity reports that really have no particular sense. Those technology pieces can't keep up with regulation. And really the attempts that financial institutions are putting in place at the moment are mostly still hiring more people, hiring more and more people in the thousands in some of the large organizations to cope with the problem, because regulation tells them to do that, basically because no one actually has started to really reinvent the wheel from a technology standpoint. We are this one. We are the ones who are reinventing the wheel, certainly, and what we want to be as a company, as a product, is one thing at the foremost, at the sort of edge really here. We are understanding ourselves as a central hub, as a technology that sits between financial institutions, ultimately helping everyone in the market to identify suspicious behavior much more precisely and much more fast, so to say, in an effort to get to the right place of fighting financial crime for real. The two boxes on the left are basically two headlines that we are working towards. We are working towards detecting, and that's more important, even sharing crime patterns using artificial intelligence. So basically allowing the marketplace to learn from each other, learn bank A to learn from bank B, and vice versa, simply because we all have one thing to do here, which is fight the crime, and we all will benefit from doing it together rather than on our own. The second white box is about real-time transaction surveillance. Of course, we've been talking about payments quite a bit also here in this call. We believe that, with the emergence of other payment methods, instant payment and things like that, more and more of the surveillance that needs to happen for what we do here needs to be in real time, rather than somehow some time later after the fact, after the transaction has already gone through, a little bit like in fraud. More and more we see that AML will look like fraud in the next year. So these are the two big headlines that we are addressing, and we want to be addressing them as a central hub sitting between many, many institutions to work for the greater good, you could say, and also drive efficiency drastically for all of the platform participants. The company itself is based in Munich. We've got an office in New York City since a year and a half, and we've got software development residing both in Vietnam as well as in Poland. So we are, global in nature already in our young age. The founders behind this is, of course, myself and my colleague Wolfgang Berner. We have spent the better parts of our lives really in payments processing before. So we've seen fintech, we've seen banking for the last 20 years. So we know, how these systems need to be built so they are scalable and, of course, secure. And our DNA from a tech perspective clearly is rooted in real time, in multi-tenancy, in everything that you need to do from a data science perspective for what we've set out to do here. We can be happy about actually getting through each and every POC in a successful manner. So once we show what we can do to customers, they love it, they buy it. And we've been recognized mostly in Germany at this point, by some of the government funds and other things to sort of build what we're doing and build more of the same going forward. The team is an ex-N26, an ex-ACI, ex-Roland Berger team, and other logos on there for you to see. And we've been successfully also winning customers both here in Europe as well as in the US in the last 18 months. Thank you very much for that. Looking forward to any questions that you might have.
Thank you, Tobias. I think it's really interesting and quite impressive what you've already been able to achieve so far. Of course, indeed, this is quite a big challenge, I think. So I can imagine that there's a lot of companies that want to talk to you to figure out if you can support them on their quest. So just to check in with the audience, if there are any questions, please type them in the chat. So what I would like to know mostly is where do you see sort of the biggest trigger is, right? So do you usually work with partnerships, for example, to collaborate with the financial institutions you work with, or do you go directly and try to come up with a full service solution? How can I look at that?
I think it's both. I would say it really depends on which customer group we are talking about. Typically, you can simply split our customer world, if you will, into sort of fintech/payment type of organizations, which are more digital but in nature, more agile in nature, more ready to use cloud-based services in nature and things like that. Those typically we serve directly with our sales force, if you will. If you talk about older school banks, just for the other part, so to say, we team up with people like PwC, for example, as a Big Four compliance and otherwise consultancy, of course. But we also team up with people like Capco or Accenture when it comes to implementing the solution in larger scale type deployments. So it's kind of half and half depending on who you talk to.
Yeah. Okay. Thanks. So I think that's a clear one. So Anne Willem, good that you're here, is asking, well, how do you see the difference between AML and fraud risk management? How do you treat them differently, or is that a similar approach?
That's a very good question. I think they're kind of like brothers and sisters sometimes, yeah, but they're not the same. I think that's very important to see. We believe that, you know, any large organization that really, you know, is going to professionalize both their fraud prevention as well as their AML is going to look for separate, you know, somewhat separate solutions initially. Why is that? Especially when it comes to artificial intelligence, you've got one thing that's very different in AML. You have the necessity to explain much better why you are doing things, because it's a compliance function here. It's not about rejecting kind of a harm from transaction only. It's about explaining why you've done things and why you may have gone to police, basically, about certain things happening in your transaction landscape, right? So the explainability for the AI is different, and that's why we believe that, you know, coming from an AML angle, the explainability and the way we actually show results in our platform is vastly different from what you would be doing in fraud. And as such, you know, that's how the difference, I think, lives mostly. In smaller organizations that don't want to be splitting it so much, and differentiate a little bit less, there are possibilities to combine the things. We are working on that ability to also do that. There's, you know, there's a trend in the market called FRAML, the combination of fraud and AML, FRAML. Yeah, so for smaller organizations, that really is a thing, but for larger ones, not so much.
Okay, thanks, Tobias. Also, I think a question from Jan Willem around that is how do you perform on positive versus false positives?
Yeah, I mean, that's one of the big things, of course. I mean, I didn't hit hard on that in the pitch because I think, you know, I wanted to get the bigger picture across a bit, right? Mm-hmm. But clearly, of course, you know, the first and foremost reason for applying machine learning or AI in this context is to avoid the false positive problem. For that, you've got to know that in any kind of bank or financial institution using or performing an AML process, you're going to see anywhere between 95 and sometimes 99% of false positives. So that would be alerts that the system spits out. And then some human has to work that alert in an effort to either clear it or report it to authorities, right? So there's a huge waste because there's so many alerts coming up that actually are of very little or no value, right? So we want to reduce that false positive rate to get back to efficiency. And instead of hire 100 people, ideally hire only 10 working those cases, just to be a bit extreme in terms of how we think about that. And actually, it's not even that extreme. I mean, we see depending on the circumstances, anywhere between 65 and 90% sometimes in terms of reduction rate of false positives. So this is 65 to 90% labor cost savings ultimately for the customer that we are serving. So it's working and it's clearly driving down cost for the process as it should be in a compliance environment like this.
Yeah, yeah, clear. One more question I see here as well from Esther is how you access the data.
Well, not exactly surprising. I would think it's based on an API, of course. So we would have our customer either out of the core banking systems or the payments processing systems call our API on a per transaction level initially, right? Because it's the transaction that we are checking, right? So that's what's happening typically, and that's the primary integration method, if you will. You would find that in some older school financial institutions or any bank almost. They wouldn't be able to do these things in real time through the API. So the backup for this is batch file processing, and they would send us batch files, let's say overnight or a few times a day. And we do the same, just using those batch files as an ingestion method. But I said it's a backup rather, not the primary ingestion method.
Cool. Thanks. I think we'll leave it at that also, because I know that you have to run out. So let's not make it too tight for you. I know that Germans like to get on time.
So no, if there's more questions, I've got 5 minutes, so by all means ask them.
Okay. So far for the stereotyping. No. No, thanks a lot, Tobias. I think it's really nice to hear from you. I think you're doing great with your company, so we'd love to follow where you're going and support you, of course, along the way. So thanks for now.
Thank you. All the best.
Thank you. I hope everyone is able to rate your pitch so far. And then we're ready to actually go to Anne Willem's story on how Silverflow is doing. Hi, Anne Willem, are you fully online?
I am. Just
great.
Share my screen.
Great.
Good Friday afternoon. So, can you see it?
Yes, we see you.
Okay, great. So I'll also keep it quick to prevent everybody from not prevent everybody from getting beer and bitterballen. Tobias, when you come and visit, you should definitely enjoy those. Yeah, maybe you could have Tobias and also the Payon team have partly supported us from the beginning, so we know each other actually quite well. And yeah, exactly what we want to do is sort of work together with companies like Tobias, where both we and Hawk AI have a great data proposition, cloud-based, modern RESTful APIs to really work together in 2021 stacks and not in 70s or 80s stacks anymore.
Yeah.
So
let's get to good. Let's get to cloud.
so yeah, we basically say we want to accelerate innovation in global payments, and we start by getting an experienced team in. So a lot of us are former Adyen, but also our CTO Paul Bying has a lot of experience with AWS. It doesn't make sense to build on. If you want to build new technology, you also need people who have worked with that before and who realize the opportunities, but also the limitations of it. And yeah, especially with Nigel and Robert and Joris, we have about 50 years plus payments experience in the team. We have a couple of more, but let's not go through the whole team. Yeah, so what we basically do is we are a modern and easy-to-use cloud platform directly accessing the Visa and the MasterCard networks. And this always confuses people. We don't access the acquirer. We are directly connected into the Visa and MasterCard networks, basically playing the processor role on behalf of the acquirer. The acquirer will still have their licenses, will still need to be regulated, of course, will do compliance, for example. And this is basically how the system works. Many of you, especially in the Netherlands, are not always as aware of the in our view beautiful card ecosystem. People are typically slightly more ideal or SEPA and open banking focused. But let me quickly run through it. So you obviously have a merchant and a shopper side. On the merchant side, typically what happens, companies like Molly or Stripe, payment service providers or gateways will provide the merchant with a checkout page where you can select your preferred payment method. This will then go to an acquirer, and the acquirer will use typically either a platform to connect into the MasterCard and Visa. Most acquirers have not built this themselves. On the issuing side, you then also have typically a platform, Visis or Marqeta, which is slightly more modern. It's are examples of platforms there. And on the issuing side, you often have banking apps like Chime or N26, which was just mentioned by Don, who provide a nice interface for customers. And depending a bit on the setup and on how far they went, they might also have their own licenses, but a lot of do this on a sort of sponsored license model. Bank, for example, the Dutch neobank, they have their own licenses, but they also have built their own issuing processing system. We're on the bottom left, so we basically are replacing OmniPay from First Data or SIA or Worldline, which is more a Dutch famous platform, or Stavis or Tandem in the US by a modern system. And this is always slightly hard to believe, but a lot of the banking rails, so there are 340 billion card transactions in the world in 2020. And most of this really runs on 30 to 40-year-old technology. So we sort of figured out a bit who are the big acquirers. So FIS, JP Morgan Chase, which by the way is mainly doing Amazon, Sberbank, the Russians, Fiserv, Bank of America. And as you see here, the platforms they use on the right, Systematics 1968. So this was before we put someone on the moon. Tandem 1982, ACI, famous company which acquired Payon, actually was founded in 1982 to talk to Tandem. The base 24 protocol they use, still used by many companies today. Heartland, Worldline, which is active a lot in Europe in 1973. And yeah, well, basically what happened at Adyen when we got our own acquiring licenses, we already knew this. We knew that all the platforms of the acquirers we were connecting to were old. It works, of course. Hey, you can pay by card with a card nowadays, but it is not great. It's not easy to work with. It's very expensive. It takes a long time, a lot of integrations, and yeah, a big blocker for us was then that most of the platforms are very slow. If MasterCard or Visa introduce something new, MasterCard Send, Visa Direct, tokenization, 3DS2, account updater, etc., it often takes these guys a long time before they do it, and actually often only after $1 million incentives of the schemes that they start moving. So at Adyen we built our own platform because we didn't really like the incumbents, and basically 2.5 years ago, Robert and I realized that if you would be a new acquirer now, you will have the same problem. You can go to some of these dinosaurs, they're still out there, of course, they still have sales teams. You might need to convince them a bit to get you on board or just pay a lot. But yeah, the only other alternative would to build it yourself. So we basically set out and say, let's solve this, not in a set up your own data center and run the software yourself way, not in build yourself way, but in a modern software as a service, cloud-based with an easy to use REST API. Because yeah, what happens if you use the old platforms? You miss a lot of opportunities. So we typically see that customers just go to Adyen or go to Stripe or Checkout because they don't have certain functionality. No tokenization, no wallets, multi-currency is just not on the platform, especially on the US-based ones. And in the end, your merchants need this and will go for another solution. And it costs you a lot of time and money. So 6 to 12 month integration is not strange. Up to 1.5 million of cost up front. You don't get good insight in your transaction costs. Manual reconciliation. So as with the fraud or the AML, a lot of manual work still. A lot of unnecessary chargeback losses, faxes, for example, this is a nice one. You cannot suspend their account, you can also close it. If you close a merchant account and chargebacks come in, yeah, how as an acquirer are you going to pass it through to them if the account is gone? So it's your loss. So we think this industry needs an upgrade. And if you didn't believe my last slide, we looked on Indeed in August, and you actually see, or if you're looking for a new job, Systematics, COBOL programmers, very much wanted by FIS in Little Rock, Arizona. Fiserv looking for mainframe COBOL programmers, JP Morgan mainframe programmers, Global Payments, Fiserv, Tandem mainframe architecture. This is up and running, and they need people to serve this. So if you like COBOL, it's a very fun programming language to work on. Not so easy, but it's a nice challenge. But these are 100,000, are six-figure jobs, definitely. So we built a native acquiring system. We designed it for 10,000 transactions per second. It's scalable. It's very data first. So Tobias, a company like Tobias can very benefit from the data we get from Visa and MasterCard and send it through so he can improve his system again and have a better data model to run his AML or fraud on. It's secure. We don't need to worry about the data centers. Jeff and his colleagues have done a very good job of making all the AWS secure, reliable, concurrent. And it's very flexible. So we have automated release cycles, up to date with the latest functionality, and we really designed it for that way. Everything is built on microservices. So if a customer asks us, hey, could we have this as a service? Yeah, we just open it as an API, and it's quite easy to do. So we clearly focus on data first, a lot of data, but also easily accessible. That's as important. Ease of use. We have a sandbox to integrate, takes you a couple of weeks. It's simple to create accounts, simple APIs, easy to use dispute application. And we want to be innovative. So microservices, strong house in DevOps team. So we quickly can adjust or make improvements. Multi-tenant approach. So if we update it, all the updates come available to all our customers. And yeah, really the latest mature tech stack, optimized not for hard disk, RAM, or CPU usage, which you needed to do in the 80s because that was very expensive, but really for developer productivity, making it easy for developers. So yeah, what are you as a acquirer? What are the benefits? Well, you will have better net payment fees. You'll save on OpEx, operational costs. You have a better product to sell with more functionality. And we offer a great ROI. It's a lot quicker and a lot cheaper, and also a lot less risk to start work with us. We often joke that the typical bank will spend 10 times more on McKinsey or Bain doing a project on how to optimize their payments infrastructure than it would cost to actually start with us and getting it up and running. Yeah, and ultimately what we want to achieve is become the global payment technology company to connect to the MasterCard and Visa and also other card networks. So serving small merchants over partners, ISOs, PayFacs, gateways, and neo acquirers, but also having tech companies and big retailers integrating directly to us for the cards. And on the back, partnering with banks across the globe to sort of offer a global acquiring offering. That's it for because otherwise I'll deprive you too much of the beers and the bitterballen. Yeah, let me know if you have any questions.
Cool, Anne Willem. Well done. Nice story indeed. And I think you're doing it's a really nice journey that you're on. You also recently got some funding in, right? So how's that? How did that go? And what are your where's that money going to be invested in? What can we expect from you?
Yeah, I cannot give away too much because otherwise my PR agent will get very mad at me. But yeah, we raised around started in September. This took 8 days, and actually I was just we're in the middle of closing it now. So our current investors and also we have some US investors on board. And what we want to do is expand the team. We're now 24 and we want to go to 80. Focusing on Europe, but also setting a footprint up in the US, both from a tech perspective, but also from a commercial perspective.
Cool. Thanks for sharing that. And if anyone has any questions, please ask. I already see one from Seymour, whether you can basically access your system through an API-based payment gateway.
Yeah, so what typically would happen is the gateway, the traditional role of a gateway is to provide a checkout page on the website where the cardholder can enter his details, and this gateway will then connect to different acquirers. So this gateway could then connect to us, and we can configure. So there's not a connection. We can configure the acquirers on our platform, and you can also benefit from all the acquirers which we already have configured on it. So it's yes, but it's not exactly. We're not replacing the gateway. We're one layer deeper behind it.
Okay, thanks. I hope that clarifies it. So one thing I'm curious about as well, do you actually also see some alternatives popping up for MasterCard and Visa? I know, of course, since they are such a dominant party in the market with regard to their payment schemes, there's always also discussion about trying to replace them. Do you see any interesting developments on that end potentially, or things that you actually need to counter on also in your strategy?
Well, there are always interesting niches, say a carte bancaire in France, or of course JCB, which is quite big in Japan, Union Pay also quite big, but really on the cross-border international, the dominance of MasterCard and Visa is quite famous. Interesting case there is, for example, Mir in Russia, where after the Crimea was entered by the Russians, there were sanctions on Visa and MasterCard usage there, and Putin decided to build his own system. He first ran into the problem that all the data centers in his country were actually owned by MasterCard and Visa, and then only after sort of mandating that every civil servant got a Mir card, and that all small stores would, by law, accept Mir, it started to get some traction. So I would doubt that in sort of open democratic countries, it's very, very hard to pull this off. And yeah, we would actually welcome the European Payment Initiative, the new schemes, because for us, of course, also interesting to connect to additional cards. But I think it's very, very hard to beat the dominance of Visa and MasterCard if you're not in a selective niche.
Yeah, no, I can definitely imagine. I think indeed the EPI is definitely interesting to follow. I can understand indeed sort of the idea or behind it to come up with something unique, but it's indeed the acceptance rate of Visa MasterCard is just very, very big and therefore still very, very appealing. And they will adapt, of course, as well, given all the challenges in the market. Let's see if there are any last questions still. I'm checking it out. If there are any last questions in the chat. Otherwise, indeed, we'll have to let everyone go for beers and bitterballen, Anne Willem. But not before, after everyone hopefully rated also Anne Willem's story. I would like to check out who is the rated as the best pitch today. And let me check that out with my colleagues behind the scenes. And that is actually Tobias with Hawk.ai, who did the best job on his pitch. Really well done. Really cool that he made it and he could join it. I believe he's already out by now, but we will make sure that he gets nice attention for his effort and being appreciated by the audience. I'd like to thank everyone. Thank you very much for joining us. I think it was great to have you here. Basically, Josje, Marcus, Tobias, Anne Willem. It was great to have you on our event today and to share your insights. If it's okay, we'll basically share with the audience in a thank you email the relationship to if you want to connect. So we'll get in touch with you to see what details we can share. So for people that want to get in touch with you, and should you want to know more about what we do, about the companies of the speakers, or anything else that you heard or saw today, please reach out to us to info or events@hollandfintech.com, and we're more than happy to support you and see how we can further connect you. For now, I'd like to say thank you very much. Enjoy your weekend, and hopefully we'll go good on the new COVID measures that hopefully are getting rid of this pandemic soon enough. But until then, we'll work on this online, but I'm very much looking forward to meet you all in person very soon. Have a great day, great weekend. Cheers.